Good afternoon, everybody, and welcome to our YouTube live session entitled Hot Stocks in a Volatile Market. My name is Glenn Tompkins. I will be your host for this session, and due to our last session with the Hot Stock panel, you guys loved it so much that we decided to go do it again. This time, I do have a mixture of new and old instructors that were here last time, and a new person here as well. So again, my name is Glenn Tompkins. I will be your host. Everybody sit back, enjoy yourselves, type in. We can see your chat. We can see your chat, and we can answer questions when you ask them of the group or individually. So you guys, thank you for supporting this. This is our inaugural something. It's the first time that we're on YouTube Live and for this panel, so don't worry about how I said it. Sounds good to me. A lot of people here. We see Damon and Paul and Jay and Clifford and Robert. Excellent. Thank you guys for chatting in, and continue to chat in, because if you do, you're in for a good surprise if you do chat in. So all of what I like to say, my backseat Baptists, if you are sitting out there in the crowd, it's going to be incumbent upon you to at least chat in at least once today. It will be well worth your time. So, real quick, the VectorVest software, we are a stock analysis and portfolio management software. We've been around for 30 years, and what you're getting here is a glimpse of some of the flexibility and the power behind the VectorVest software, and how the instructors that are here will use that power to put into your hands some really good stocks to trade through a volatile market, but they're going to be hot stocks. Let's talk about the people that are here. If you're looking at all the way at the end, the big tallest person here, man, he looks like a big guy in a little chair, but it's Jerry D'Ambrosio. Jerry has been here for 13 years. And when I say that this is a good panel of people, you're going to get a lot of insight as to a lot of the expertise behind the four of us that are sitting here. Once Jerry talks about his stocks, he'll do a little bit more of an introduction of himself. Next, we have Steve Chappell, which is the Director of Trading Systems Development, TSD. Told you I would remember as long as I put those letters in my head. Steve has been here for 18 years. And he happens to be one of my best friends, actually, and a mentor to me. And he's got a say again.
That's cute.
It is. It's not. It's true.
He doesn't like us.
I don't like you guys as much. I like Steve a lot more. Favorites. So there we go. All right. So Steve is going to have a couple of picks to look at. Next to him is Jim Penna. As he just said, I didn't like him as much, but that's okay. Jim is our manager of retirement, and as you look at just these three people in and of themselves, Jerry's perspective on how to pick stocks, Steve's perspective on how to pick stocks, and Jim's perspective on how to pick stocks are going to vary a little bit. So you're going to get different perspectives, and from the standpoint of what we're here to do, that's going to be good for you. And my name again is Glenn Tompkins. Oh, by the way, Jim has been here for 12 years. My name is Glenn Tompkins. I primarily do a lot of webcasts. One of them, most people may know me from, is the Training Tuesdays for the navigational series. If this is the first time you get to see me, as opposed to just hearing the voice now, you can put a face behind the voice. And I have been here for 15 years. As I look through all of us, you're getting at your disposal right here 58 years worth of experience. That's a lot of time between four people. 58 years of experience, and this is what's going to make this panel that more exciting. You're going to be able to walk away with confidence, knowing that some of the stocks that we're going to look at may fit you, and depending on your perspective on how you trade, you're going to find a stock that you're going to be able to use in a volatile market. So thank you all for being here today. Thank you all for showing up in force to support this this presentation, this live stream. And you know something? What we need you to do to keep this going, we need you to like, share, and subscribe. Biggest thing, subscribe to the channel so that you can really get an opportunity to stay on top of what we do. And I like that. Jake says, is that really Jerry D? A star-studded event. Wow. So that's good. Yeah, how about that, Jerry? You turning red a little bit. You're blushing a little bit. That's kind of cool that you're blushing a little bit. All right. So that's important. Like, share, and subscribe. But biggest thing I really want you guys to do is subscribe to the channel. We are going to grow this space on social media, and it's going to only happen through you. All right, so if you know somebody, really, Jake, go Patriots, really? You're trying to throw me off already, and it's starting a little bit. All right, so you know I'm a Giants fan. All right, now when I talk to you about chatting, it's going to be well worth your time to chat. Because if anything, if you will type in or chat in URS, as in Ultimate Retirement Solutions, you will be entered into an opportunity to earn or get a free Ultimate Retirement Solutions course. Jim is going to talk a little bit about that when he gets into his presentation, but you will get that course for free, but you do have to type in URS. There you go. I'm going to watch them pop up on the screen, and this gives everybody an opportunity to be entered into this giveaway. Really, Jake says Jerry is my idol. Wow, how about that?
Very nice.
It is very nice of him. It's
nervous,
nice to
Jerry.
see the folks. Thank you and URS. So a lot of people in the room. You guys can see each other's chat, and what we're going to do at this point in time, we're going to start. And we're going to start with me. All right. Me being your host, I'm going to get my stocks done. And we're going to talk about it. And after we talk about each stock, everyone's going to have an opportunity to talk about it. So it's going to be a little bit of a round robin. And based on perspectives, we may have different thoughts on the stocks that we picked, that each other picked. So we get to have that insight. And you guys will chime in as well. Too late, I've been retired for 15 years, says Clifford. All right, trade like a pro. There you go. Jerry is most likely, he's our tech guy. He's really grown into that opportunity to be a little bit more tech savvy. And you're going to look and see that the stocks that he's looking at are more based upon some technical analysis. All right, so as you can see on the home screen, we're not going to spend much time on the home screen. We're going to probably, we are. Wow, Jerry's the man. Look at that, Jerry. You got some following here, Jerry. All right, we're going to spend most of our time in the graphing portion of the software. All right, a teacher, basketball player, and dad. Look at that. All right, the first stock that we're going to look at is SAIA, SAIA. SAIA, as you can see, is in the transportation truck. Now, the reason why I picked the three stocks that I did, I took it back to a little bit more of simplicity, okay? If you know me, even when I do the strategies of the week, the simpler it is for me, the simpler I can make it for you. So the stocks that you're going to see that I chose were really based on the top industries in the market, and I looked through those top industries at the stocks. I took a look at the stocks, and I looked for certain criteria in order to call it a hot stock. And keep in mind, the second part of it is in a volatile market. So what I was looking for are nice steady movers, moving from the bottom left to the top right on the graph in as smooth as possible, because when you get into a volatile market where the market's going up and down, you want to find stocks that have the persistence of consistently moving up even when the market is volatile. So the first stock was found in a transportation truck. I'm going to go back to the home page momentarily. You'll notice the stock that I picked was in the number one industry in the market right now, which is transportation truck. All right, so that was one reason why I picked it. Go back to the graphs. Notice that I have a couple of things on the graph. One, I have support and resistance. This solid line serves as a good level of resistance, watching the stock finally break through, number one. Number two, I am looking at a 20-day exponential moving average. It's serving as a nice level of support or trend on the stock. Knowing that I'm looking at a 3-month graph, this moving average has done a good job keeping you in the stock. Down below, earnings per share. Why earnings per share? Because earnings is the engine that drives the stock's price higher. Put those things together, this serves the purpose of looking at a hot stock and most likely still moving from the bottom left to the top right. Nice smooth pattern, breaking through resistance. Now, what's going on today? The stock's going down. Does that take it off the table for it being a hot stock? The answer to that is no. The stock is still above that 20-day moving average, exponential moving average, which was one of the characteristics that I was looking for. How is truck industry doing today? It's actually going down a tad bit today, as well as the stocks as well. But look at the graph. Is this a stock that you would be comfortable in? Answer is probably to that is going to be yes, but today is not the day to buy it. And where did it pull back? Right at resistance, right here at the high. So what I'd like to see, if the stock can continue to move higher, break through that high. Remember, that's a high over the last 3 months. The stock is doing exactly what you want it to do, which is going up in price. The next stock that I'm going to look at is CVCO. That one happens to be in the building residential commercial. The stock was in a little bit of a channel and finally broke out, and now breaking out still above that level of resistance. Earnings took a little bit of a hit, but it's still moving higher than it was 3 days ago. Saya says Joff is just not a day trade. Yeah, it's not just a day trade. From over the last 3 months, again, bottom left, top right, a little bit more volatile than the first stock in that it did fall below the level of the 20-day moving average. Look at this, though. It fell below on an end-of-day basis, no follow-through. Fell below on an end-of-day basis, no follow-through. So even looking at it from the perspective of still staying in the stock with the 20-day, and where did it stop? Right at support. Nicely bouncing up and moving higher. You know what I didn't do? I didn't give you all an opportunity to talk about the first stock, did I?
You did not.
All right, so I'm going to go back to that real quick. I totally forgot about that. I'm just talking. So that was my decision and the reason why I picked SAIA. All right, anybody have any?
Glenn, I think that it would serve them well if you told everybody exactly what price you feel the price should go above before buying it. Because there is some resistance right at the top there.
Excellent.
It almost looks like at the same exact price. So what price is that? Everybody should be aware that they should wait for that price to be, price of the stock to go higher than that before they get in.
That's a good question, Jerry. So general rule of thumb that we use at VectorVest, on a stock at a price of about $90 or so, let's wait and make sure that we're buying into a rising stock. So you look at the high and put your order in about 12 cents higher than the high, which is about 1/8 of a point. That helps to, one, ensure that you're buying into the stock as it's still rising, and it keeps on with that nice uptrend along with the 3-month graph. So about 12 cents higher than the high would be a great opportunity to put in a buy stop order. That way, if you're not at your computer, the order will trade or hit throughout the day, but you're buying into a rising stock. Any other feedback?
An alternative to that, because it looks like the next move might continue lower, would be to wait for it to hit the 20, like it did about 8 days ago. Hopefully it'll rest or kiss the 20, giving you an opportunity to put that same kind of an order above the kiss candle. Thereby you're buying into the stock after it stopped falling and started to rise again. That may happen first before it takes out the high.
That's absolutely correct, because what did he have right here? A little bit of a doji cross, right at resistance. The stock's price does have follow through. That is not a reversal pattern, is that, Jerry?
Doji's more indecision than reversal, but should be you should be aware of any doji, especially at the end of a trend.
Excellent. And I like Steve's idea of making sure that if it does pull back, that 20-day exponential moving averages serves as a really good level of support or a good trend line for the stock. And Jim, anything you want to add to that?
Yeah, no, I would just agree with these guys. I like the idea. Steve said if it does pull back to the 20, either way, however you play it, I do think that the buy-stop order is the way to go on all of these stocks to save yourself the trouble. But waiting till it gets through resistance or coming off that 20-day, just keep in mind the buy-stop. I like it.
All right. So again, that was in the transportation truck industry, the number one industry. Number one industry. I'm going to go back to CVCO. That one is in the building, residential, commercial. And if I go back to the home page, that happens to be the number 3 industry in the software. So again, I'm using the power of the software to lock in to my hot stocks going up right now. What I liked about this, see that level of resistance? What did it do today? It broke above. The earnings is higher than it was 3 months ago, even with the hiccup right here, but still moving higher, nicely above the 20-day. Same kind of scenario. This one, and it's a $197 stock. This one, I'm more apt to say that it will hit the 12 cents higher first, before pulling back down. In this case, nice open candle, very little wick at the top. So a nice strong day for the stock. All right. Anybody have any input on this stock?
I just want to answer a question that Mendy has. Mendy is asking, letting it bounce off the 20-day, can VectorVest software catch it at that point? Yes, in a way. You can scan for stocks that are within a certain percentage of a particular moving average. Yeah. So as far as retracing from it, you're going to have to look at the graph to determine that. But you can run a search to find stocks that are maybe 1 or 2% above or below a certain moving average. If you need help with that, just give our support department a call.
Yep. Good question.
RMA.
All right.
Yep.
But is the candle a dark cloud? Is that on the other stock?
It was on the other stock. I think it was SAIA. But no, Jay, it's not a dark cloud. Go back to that one real quick.
Wasn't that more like a one?
It's just a doji, Jay. You know, that red candle previous to today's candle is just a red doji. Yeah. I don't really see a dark cloud. I don't see any bearish candlestick formations there other than just a doji, that just represents indecision.
Yeah. And no retracing from resistance.
And just retracing from that doji indecision leading to weakness. Steve might be right. It might come all the way back down to the 20-day before it breaks up and makes a new high.
All right.
Or it might keep going, so don't buy it just because it hits the 20. Wait for the bounce.
Right.
Yeah, wait. That's important. Wait for the bounce.
Yeah.
All right. Let's go to the third stock, which will be SAH in the retail auto parts. Retail auto parts. Going back to the home page again, and let's move this over a little bit. Retail auto parts. How about that? All 3 stocks that I picked were in the top 5 industries overall. Again, simplicity was for me, and taking advantage that VectorVest provides you with the best industries in the market, in the software at all times, was definitely exclusive of what I was looking for. And Paul says 3 green lights. Finally, RT went above 1 in the home page. Now the market can be officially called in an uptrend right now. Let's go to the last stock. 3 months. Nice upward move over the last 3 months. Love the stair-step effect on earnings per share. Nicely above the 20-day moving average. Right, doing the same thing again as SAIA. Right at resistance. Let me tell you something, folks. Support resistance really works. And where is it retracing from? Right at that level of resistance. A small body, so not a big down day, but a red candle, a red bearish candle nonetheless. Same kind of scenario. If I'm not in it yet, let's see if it can go 12 cents higher than the high. Or if it does pull back because it may have some downside, that kiss off of the 20 might be a great way as well. So either way, you have an opportunity to trade any of the stocks, and look at the body even got littler. Is littler a good word?
Smaller?
I like littler better.
Okay.
All right. It got a little smaller. And so that's where we stand. Any comments on SAH?
Well, just one thing, just a quick observation. I think it's fairly common when a stock breaks out of a long-term channel like that, number one, it's a great time to think about buying it. So we're all, you're right on top of that. It's also very common for price to want to retest that area. So that might be what you're seeing. But so I like your idea. Either buy 12 and a half cents above the prior high, or here again, wait for the retest to the moving average or to the what is now support, and use that high price of the kiss candle and buy from there.
And actually, this one doesn't show nearly as much weakness in today's candle as SAIA did.
Right.
It's a down day, but not extraordinarily big down day.
Yeah.
All right. So those are the three stocks given to you by me. And the next person on the list will be the one, the only, the infamous Steve Chappell.
That's too much to live up to.
Okay.
I could live up to the infamous part.
Yeah, well, yeah. I got that one down, All right, so let's, whichever one you want to look at first, Glenn.
All right, let's go over to OMI.
Oh, yes, the underdog. I like it. So this, I figured, knowing the esteemed colleagues that I have here flanking both sides, I feel surrounded.
Well, you are. Okay.
I know that I knew Jerry would be going technical analysis and doing a great job with that. I knew Jim would be going retirement and finding some awful great overall quality stocks for you. I knew that was going to happen in spades. So what and Glenn obviously finding high-flying stocks and high-flying industries. So I went a different route. And I want, so that everybody that attends this session can get something, some of you out there might want to take a flyer or two on some potential trades that could be big home runs. Owens & Minor is one of those kinds of companies. And what you have here on the chart right now, Glenn's put it up there nicely. We've got price in the candlesticks. We've got a 20 MA, which also is acting nicely as support right now for the stock. Most importantly, though, the observation that I made when looking at this, and by the way, we traded this in the Jockey Club several sessions ago, and we're still in it right now. So we actually own this stock. I saw the jump in earnings. If you look, and not only the jump in earnings, but the critical situation where we've gone from negative forecasted earnings a year out to positive forecasted and rising outlook beyond that. So here again, this is not going to be a value pick. It's not going to be a safe and sound retirement-minded stock. It's going to be a stock that looks to be very, very hot. This was called Hot Stock Picks. And it's one that I have picked myself, and I think it's a good pick for the reasons mentioned. I would say the same thing about entry at this point. I would say that you're seeing a little bit of weakness on the current candle, a little bit of indecision, not quite a doji, at least by the constraints of definition of doji, but enough weakness there where I would also do the buy stop limit order for the following session. So the buy stop is a price at which you stop buying at that price or below. So currently, what's the high on that candle, Glenn?
The high
843.
is $8.43.
$8.43. Now this is an $8 stock, so you don't use 12 and a half cents.
Right.
Okay, that's shaving percentages off your potential return. So you just want to use a few pennies. I would put it 4 pennies above the high, something like this. You don't want to do 1 or 2 because prices sometimes don't stop on a dime, but definitely don't want to do 12. So maybe 4 cents above the high on that one. I think you might see that happen before it pulls back here. But also, the same thing would apply. I always have a two-prong approach. I'll either take the new high because, it hit a new high yesterday, it hit a new high the day before that, it hit a new high the day before that, it hit a new high the day before that. So there's no such thing as being too high. Or, retrace to the 20 and rinse and repeat, do the same tactic there. And I'll give it to you guys, whoever wants to
I love the 20-day EMA sloping upward. When any time you look at moving averages or use moving averages in your analysis, you want that pattern. You want that upward slope if you're bullish, downward slope if you're bearish. Earnings just turning positive, I think that's great. It looks great. Just got a buy rating last month. Cool. Looks good.
And I'm looking at both things.
So you definitely don't want to buy that one.
Right.
Earnings is the engine that drives the stock's price higher. Okay. Yeah. Number one. Number two, don't sleep on the stock getting a buy recommendation. A stock takes a lot of work for a stock to get a buy recommendation. And as it's moving up, earnings are getting better, going from negative to positive, using that 20-day exponential moving average. All things are in play. That is, again, the epitome. I like to use that word, epitome. That's the epitome of what a hot stock looks like.
I knew it was coming.
Yeah, you knew it was coming. But all right. Any other? Jim?
Yeah, I'll just add real quick. I know my title is Retirement Services, and the stocks I'm going to choose aren't going to look like this exactly. Or I'm not going to analyze them that way exactly. However, as a trader, someone who used to work on trading desk, I would probably be in this stock already. If I'm looking at this, I have a stock trading higher than yesterday's high. I've got green lights across the board, and what everybody's already commented on, the stock looks great. You know, I'd probably be in the stock now.
I am.
Yeah, I mean, if I'm looking at it, I want to buy it on uptick. But so what do? Wait till tomorrow's next high? I don't need to do that. You
That's
know,
right.
so I still might put the buy stop in, and maybe just a couple of pennies, as Steve said. But listen, if it's a hot stock and the market's rising, I like the way it looks here.
And notice that we have been in this little sideways move for a long time. What's the stock doing overall? It's definitely moving up. Definitely moving up. All right. Let's go to your next stock.
So
Steve.
we're going to go literally from, well, almost anyway, from one side of the spectrum to the other. That's very much a speculative play there. I want to make that clear. It does look really good from that perspective. This one is actually the top VST, top Midas Touch stock in the platform right now, and it's CPRX. Great little drug company. They've got a lot of really cool stuff in the pipeline. I don't want to get into all of that. Okay, we can go on and on and on about that, but they've got a couple of phase 3 clinical trials coming down the pipe here near term, and they're making money and only at a $7 price point. Which is difficult to do for these types of companies. So, again, I like the growth here. You can't see it on the chart as we have it now, but this too is a company that has gone from negative forecasted earnings growth to positive forecasted earnings growth, and the growth has been very, very nice there as well. And everything that I read up on it is only expecting that picture to improve. What matters most is VectorVest expects that picture to continue to improve. So everything looks good here, at least from the surface. This stock is trading more at its valuation currently than the other stocks, so it's got some value to this trade. Most importantly, it's got extremely high growth, and inevitably that's what's driving the stock. Tactic remains the same. This one maybe got more hot than I wanted to before we started this particular presentation. I kind of feel like it's gone a long way today, and that usually, you want to be careful with that if you're looking to enter today or tomorrow. I would definitely wait for tomorrow. One reason is that's the tallest candlestick you see for the last 3 months, so you're already 2 sigma on a particular day. So here again, I just buy above the high, wait for the pullback. My method never changes. It's always the same.
What I like about when Steve picks a stock, especially if it's a drug stock or any stock in general, Steve does a lot of homework behind the stock.
And just a little.
Well, just and knowing
Enough.
things like this company's got drugs in the pipeline, that they're already making money. The earnings per share shows that, and he's right. A lot of these lower dollar stocks, it takes a lot of work to really be able to make money and be that lower of a dollar stock. But beautiful looking equity curve.
Looks
Anybody
good.
else?
Looks great.
Okay.
Yeah.
All right.
You guys can say the facts,
What's the fact?
If you don't like something, say it.
No,
What's not
I
to
don't
like?
think there's
All
much
right, all
not
right,
to
all
like
right.
about
What's not
this.
to like?
Jim's going to say
I was just
something.
going to say quickly, I know we're looking at a 3-month graph, but from a more historical view, I mean, can the stock
How
go
much
higher? Has
higher was
been
it? Right,
higher?
right.
I mean, is this just the beginning of
Go
a
to a
move?
year,
Just
Glenn.
try 1 year, just out of curiosity.
That's
So
a
you
1 year
got
high.
a 1 year high here too, which again leads me to, it ticks above that intraday high, and there's where my order is in as well.
And Steve was right. It was negative, but look at the transformation from sell to hold to buy, and why it's a hot stock. Yep. All right.
Great.
The next person is going to be Jim Penna. again, the manager of retirement. And before he goes to talk about his stock, which is CINF, remember, if you type in the room URS, you're going to be entered in to win one of Jim's courses, which is the Ultimate Retirement Solutions course. Everybody who types in URS is entered in for that free giveaway.
Yeah, and the URS course is launching in October. So if you came in late, type in URS into the chat box, and you can join us on us. And we look forward to seeing you there. Even if you don't win, we look forward to seeing you there. The URS course is designed really to build and manage a retirement portfolio. We look at capital appreciation, but we also look at income from covered calls. We look at income from good quality dividend stocks. And for me, most importantly of the three tiers that we look at is capital preservation. So we delve into some options and some hedging techniques and ways to protect our retirement portfolio. So I see everyone typing in there. That's great. We look forward to seeing you there.
Bunch of new people.
Yeah. Again, that'll be launching, I think, sometime. I don't have an exact date, but sometime in October. And along those lines, if we come to my first stock here, which is Cincinnati Financial, it's an insurance company. Now, here's the good thing about putting up a more conservative stock and a different kind of outlook, is that if you notice, we have a 5-year graph up here, and the stock's down today, and I don't care. I don't think it doesn't really matter to me because we're looking at this in the longer term. So today is the first day of a confirmed up call. If we're looking to fill spots in a retirement portfolio, today's the day. Yeah, I don't want to buy into the downtrend here, but it doesn't bother me as much. And what you see on the subgraph, I put earnings per share up there as well, and you'll see in Cincinnati Financial again on this 5-year graph. Earnings are a little choppy, but that's fine. Earnings are rising, and the forecasts right now are good. The company's been performing well. And even if you go through that period of time where you see through 2017 and 18, where the stock may not be, performing as well, but you've also got, a rougher time in the market. The key here is to look at that dividend payout.
Yeah.
So Cincinnati Financial is on our dividend payer watch list called the DRIP 25 Plus, which is dividend reinvestment plans. All of the stocks on that list have not only paid their dividends, but have grown them year over year for at least 25 years. Cincinnati Financial's on that list, so this is one of the reasons I love the stock. And then to go back to the idea of, listen, a good quality dividend paying stock in a volatile market, you'll see for most of 2019, it's got a similar pattern than many of the stocks that we're looking at even for shorter term. So what it does is it has the best of both worlds. We have capital appreciation potential here. We've got, I think the RS on this stock is like 1.54, 1.40 right now, I guess. I'm thinking of the other stock we'll look at. But you've got a very high relative safety number, right? You've got a great dividend payout. The yield is not quite as high as we might like. It's around 1.5, give or take a tick or two. But a good quality stock for a longer term capital appreciation dividend type of stock. So even if you change it to 1 year, you'll see a nice movement there just to give it a little shorter term look. And you'll see that nice price pattern. So that's the kind of stocks we look for in our retirement portfolios and in our more, I'll say prudent portfolios. So we love Cincinnati Financial. I don't know what you guys think. I know, again, it's
think about it from
it's a little different from what we're talking about. But
from a retirement perspective, who out there would not want that in their retirement portfolio? Especially knowing that over the last 5 years, the dividend payout is grown. You're getting a bigger paycheck for owning this stock year over year.
You might say pay raise.
There you go. And you're owning the stock. And even when the stock is going through this sideways move, what's a good thing to do from an options perspective? Right. Sell covered calls?
Yeah, you could be selling covered calls.
It's still growing in dividend.
And then one last comment. If you look at this, and we go back, Glenn, go back to the 1 year if you could. So if we go back to, even in the 1 year graph, now everybody remembers what happened last October, the beginning of October through Christmas.
Yeah.
Now look at this stock through that mayhem that we experienced that 3 months leading up to Christmas Eve, right? Yeah, the stock went sideways, The stock never became a sell-rated stock, so it never fell below its stop price. In fact, became a buy-rated stock
During
throughout
that time, it sure did.
And so this is the kind of stock. So in a volatile market, with a little different objective, I think a good quality stock in a volatile market.
It's a good pick.
Very good.
All right. Let's go to your next stock, Jim, which would be AWR.
And AWR, not surprisingly, has a very it has a very similar pattern to it, because this is what I look for. I start with a 5-year graph as opposed to the shorter term, and I look for these type of stocks. So again, AWR also on the DRIP watch list, continuing to grow its dividends. Here are much smoother earnings. Now this is a utility.
Right.
It's a water supply utility, which have been in favor, utilities, many of the utilities, because of where interest rates are, so folks are looking for a higher yield. This stock, again, the last couple of days has taken a little bit, I won't even call it a hit. It's down slightly over the last couple of days. But again, the idea of a stock where you've got capital appreciation potential along with the dividend payout is great. Now the dividend yield, this one is about 1.3 or 4%. The dividend paid is there at $1.22. The relative safety here at 1.31. We can see in the control panel there. So again, strong relative safety, safe quality stocks. Now, we don't have to go into the graphs, Glenn, but I'll just comment real quick before you guys talk about this stock as well. In the URS course, we do have this idea of just collecting dividends. So we have stocks where a stock like AT&T, like Verizon. These are stocks that have dividend yields much higher, twice what the two stocks I just showed. Those graph patterns are not quite as smooth, but that's fine. We don't mind some fluctuation in a good quality dividend stock. But the URS course will explore those type of stocks as well, where your main objective is really just the dividend payout. So a lot of good things going on there. But AWR, CINF, I just think they give you the best of both worlds there.
I want to address Mark's question. It's pulling back in an upturning market, and I'm also going to go back to Badger's question about rotation. A lot of these good stocks that Jim is talking about are good long-term stocks. But what's happening in the market right now, as the market is starting to rise, is a lot of money is rotating out of a lot of the higher dollar stocks into the lower dollar stocks that are pushing the market higher. So, question is, it's pulling back in an upturning market. Is it really? And think about this. If this is in your longer term retirement portfolio, think about this. Are you pulling the trigger to get out of it? Are you panicking yet? No. But look at the long-term trend over the last 5 years, Mark, in regards to this stock. You give this stock a lot more room to move down. Go ahead.
Well, what the chart tells me is you just had a really good earnings report recently.
Had to have, yeah.
And it got a little hot, and that's just normal. All I see right there is that is a great looking stock.
Oh, yeah.
Just some natural profit taking.
That is absolutely normal.
Yeah, and again, just to be clear, while we are looking at the hot stocks, I'm fine with it being down. We have a confirmed up call today. If I'm looking at it from a different perspective, I'm building and managing a retirement portfolio, looking for capital appreciation and growth, absolutely no problem pulling that trigger on a stock like that.
Excellent.
Even today, and just look at it again in a little different perspective than we've been talking. I'm looking at it as I'm getting a little lower price here. I know it's down.
The other thing my keen eye is picking up on here, Jim.
Are you a hawk?
Is the acceleration of dividend growth.
Yeah.
You had a 6-month window where it stepped up in 2017. So, and look at the jump on the last one.
Yeah.
And that's a reflection of a company that's making more and more money more quickly.
Right.
I think it's a great pick.
Yeah, Glenn, even go to 10 years real quick.
If I didn't like it, I'd tell you.
Just to give you the idea.
This keeps getting better.
Yeah, here's a 10-year. And, for the guys who remember, all of us remember, and any subscribers remember, we used to have a talk called the Golden Staircase.
Yes.
And it was a little different topic, but I've stolen the phrase back for my dividend staircase, right? Mm-hmm. That's the golden staircase on dividends that we look at. Now, that's only 10 years, but again, it's continued to grow. Mm-hmm. And, that's a beautiful stock to have in your retirement portfolio,
Absolutely.
I think.
I love both of those stocks. Mm-hmm. I love both of those
picks.
stocks. All right, now we come to our tech guy, Jerry D.
Glenn, let's start with EIGI first.
All right, let's go to EIGI.
Okay, and this pick, guys, is just a classic resistance breakout. Price is obviously in candlesticks. You have a support and resistance that Glenn has put on the chart. What he's hovering over now was support. And at that support level, let's go down back to support. At that support level, you could see three very clear retracements. Okay, almost a little triple bottom here. We're looking at a 1-year graph. I would consider that at least a double bottom, more so a triple bottom. Yeah, most recently at the end of August, middle of August, you had your third retracement off of that support level. Okay, that would have been a great time to buy. So what I'm doing here, guys, is I'm kind of doing two things. I'm teaching you, how to take advantage maybe of the next support retracement that you see, and also giving you a stock, in this case, EIGI, which I think is an excellent candidate today, because what it's recently done, not only has it retraced from support about a month ago, it is breaking out through a pretty significant resistance level there. And if Glenn hovers his mouse over that, you had a couple of touches right in that. What price is that? I can hardly see
That's
that.
at $5.79.
Right. So yesterday's price action broke through that resistance level, which is very bullish. And today we're getting follow through, even more bullish confirmation of that resistance break. What I like about this stock, not only is it breaking resistance, but go back to a 1-year chart. It doesn't look like we have resistance again until $8.05. So I think there's a lot of upside here. I really love the 4 or 5 months there of channeling, breaking out yesterday, following through today, a ton of upside all the way up to right around $8, which is the next resistance level. So this is a pick, guys, that I think is suitable for today, viable for today. And what do we have now? $6 price. Zoom into the more recent time. And let's just go to a 1-day chart, Glenn. All right, so here's a 1-day chart. Stock is just recently pulling back. We're just looking at 1-minute price bars. It's late in the day today. It's 2:43. I'm not sure if you would buy this yet today. Go back to a 3-month chart. So yesterday we had the breakout. Yesterday's breakout resulted in a high price of $6.04. So you saw the breakout yesterday. You liked the price action. You wanted to get into the trade today. You waited for the stock to go above yesterday's high of 604. Like Steve said, it's a lower dollar stock, so maybe you put your buy stop order in at 608. You for sure got filled today, and you're a little bit in the red, but you're still in the trade, again, with a ton of upside.
I like from the perspective of the channel bouncing out. That was a significant channel. It got touched twice at the resistance, got touched 3 times at support. That's clearly saying there's a change in sentiment in the stock. It was sideways, it was indecision, it was up and down, up and down. Now the up and down days are gone away. It's like happy days are here. Yeah, happy days are here again after the stock went sideways. So I like that. And that's early. How many times have you heard someone say, man, I want to get into that stock at a good early point? This could be with a nice upside up to about 8. This gives you a good profit target on the trade.
Yeah, that's what I loved about it the most, is the upside potential at the next resistance level.
And even at the low, when you take it, I mean, that's a big channel.
That
was a juicy triple low.
Absolutely, yes, it was.
Yeah.
Jay says, good find, Jerry. Did you use a search to find that one? Yeah, price breaking resistance, Jay. So in our Unisearch tool, if Glenn goes there real quick, in our Pro Trader folder, we have a search called breaking resistance. I might have made a tweak or two to it, but I'm pretty sure that that's the search that I used, price breaking resistance. Okay. Next one is IART. Now this is a little different. what we're looking at on the chart, obviously price is up at the top in candlesticks. There's two purple lines almost. Let's change one of those colors, Glenn, if you don't mind. Glenn is changing the 50-day moving average to yellow, so everybody can see the difference between the two. So the yellow moving average is a 50-day simple moving average. The purple moving average below it is a 150. And the indicator at the bottom is stochastics. So about a year or so ago, I was part of creating a course, a new course that we launched last April called Swing Trading with VectorVest. We invited our managing director from our UK market, Dr. David Paul, over, and him and I taught that course here. And I developed this little technique for that course. So basically what we're looking for is, zoom in there so everybody can see it on the more current time frame.
You want a 1 month?
3 month is fine, just so everybody could see price action a little bit better. So what we're looking for is an uptrending stock, and we want to take advantage of a retracement or a pullback within that underlying uptrend. So 50-day moving average is above the 150. Both are sloping upward. And a big part of this system is the separation that's being created between the two moving averages. Okay? So put your date arrow on August 30th. Put your cursor on August 30th. That was about 3 bars earlier. So one day after. So on August 30th was an entry. And let me explain why we entered on that day. You had price just recently hit a new high back in July, retraced, moved steadily lower towards the 50-day moving average. You could see where it stopped, though. It stopped right at that 50-day moving average a couple days prior. Price is above the 50. Both the 50 and the 150 are separating nicely, letting us know that we're in a nice, strong emerging trend. The stochastics oscillator, the price broke down enough there at the end of July in August to cause stochastics to go below 20. So what we're looking for here is a retracement off of the 50-day moving average and the stochastics oscillator crossing from below 20 to above 20. That happened on August 30th. That was our entry into this trade. So are we a little late? I don't know if we're a little late. We're approaching the most recent swing high. But this, guys, I wanted to treat more as a teaching moment than necessarily here, go buy this stock tomorrow. So we had that retracement on August 30th, and as you could see, that was a couple of days off of the 50-day moving average kiss. Now, I know what you see. You see price falling for the next 2 days. Probably wondering, well, would I have gotten out of the trade? Should I have gotten out of the trade? When you're going to trade something like this, a 50-day moving average retracement, it would make sense to use the pivot or the kiss of the kiss bar of the 50-day moving average as your exit. So as you see price rose off of the 50-day there for a couple of days, you entered. Put your mouse, Glenn, over the low of the green bar, 2 green bars prior to our entry. Right there. So the low on that day was 58.10. So as I see price falling for 2 days after I buy it, I'm a little concerned, but I'm going to use that low price. I'm going to use the low of the kiss bar as my exit. And you can see price never fell below the low. So the uptrend there stayed intact and price took off from there, giving us a nice profit potential. Stochastics is currently rising. Price is still above the 50-day moving average, approaching the most recent swing high. So you may be asking, well, if I'm in the trade or if anytime in the future I trade something like this, where should I start thinking about taking profits? At the most recent swing high would be where your initial profit taking would take place. You can take half the position off at the most recent swing high, let the rest run. So that's kind of where we're at now. If we would have entered on August 30th, we're almost in profit-taking a situation currently.
I'm going to start because I think that this is where the power and the flexibility of the tool and the differences in how we do things comes into play. Utilizing moving averages like a 50 and a 150, from a trade perspective, you might say, that's a big moving averages. But you know something? As Jerry explained it, in understanding how to use those moving averages makes a difference than just taking it at face value and saying, that doesn't seem like that's a trading kind of scenario. So I like that. And the rules that he has in place to make the trade, it's all about planning the trade the plan, without getting nervous, without making an emotional decision and go, oh my God, it fell for 2 days. What do I do? What is the plan? Knowing where you're going to get out is important. And I love using stochastics. I'm not a big fan of stochastics personally, but moving from being oversold to now rising up, that was a good looking trade.
Yeah.
Steve?
Nothing to add, really. I thought he covered the bases well here. Yeah.
And this, by the way, thank you. This, by the way, so that course, Swing Trading Success with the VectorVest, this technique was built into this course. It's actually called Jerry's Gems. It's a little search that a little scan that I came up with for that course in particular. Not everybody has it, so you might be wondering, why don't I have that search? That particular search that I'm teaching you here, or that technique that I'm teaching you, was taught at our Swing Trading Success workshop that David, Paul, and I did a little over a year ago. And the next stock is very similar. So if Glenn goes to FSS, very similar. So if, let's just look at a 3-month chart. All right. And change one of those moving average colors.
Let's change
the 150. That's
150.
fine. You can make it yellow as well.
I was already going to do that,
There we
Jerry.
go.
I didn't need your insight. Guys.
Okay. All right.
I'm a big boy. I can handle it.
All right. So let's go, pull that. Let's go a little bit more than 3 months. I want everybody to see kind of price. That's fine. So similar situation. End of July, price made a new high, pulled back towards the 50-day moving average. And what's pretty cool here is, as the stock was pulling back towards the 50-day moving average, there was actually separation being created between the two moving averages, which really told you that you're in a nice, strong uptrend. I know the stock is pulling back, but it's, buying the dips. You've heard buying the dips before, right? That's a little easier said than done, because you don't know when the stock is going to stop falling and start going up again. So what we wait for is the kiss of the 50-day, which happened. Great, Glenn. Thank you. Perfect. 828. The low was actually, I think, right on that 50-day moving average. So recent new high in July, pull back towards the 50-day. August 28th was the kiss of the 50-day moving average. Okay, that's not where we enter, though. The trigger to get into this trade is when the stochastics oscillator goes above 20. That happened there. That happened on August 30th as well. So you had a 2-day retracement off of the 50-day moving average. You also had the stochastics oscillator going from below 20 to above 20. There's your entry. And same with as with our IART, the KISS candle, if Glenn will zoom in a little bit, the low of that candle of 28.41 is my initial stop. So if I'm in the trade and I'm wrong and the stock goes the other way and starts to break down, I got a really tight floor there to protect from a large loss. The stock did go down the next day, right?
After entry.
Yeah, after entry, the stock did go down the next day, but as you can see, has retraced nicely from the 50-day moving average. And we're in a similar situation where we might start thinking about taking profits now, because we are right at the most recent swing high. Let's go to a 1-year chart.
Which would be about 32.71.
Okay, so that's really the most, the only resistance level that we see there is at the most recent high there.
Again, from a technical standpoint, I think that's very well explained, and I like it.
What I'm seeing on Jerry's stocks, whether he's using support and resistance or the moving average as a support and resistance, that it just hammers home. Steve and I were talking before we came on. We worked on the trading desk, and it was all about where are the buyers, where are the sellers, where's supply and demand. Demand held up on the 50-day moving average, and in the earlier stock, it broke through resistance because supply had cleared up, and the stock rises. So however you choose to use them, and Jerry, I can't even begin to explain it as clearly as Jerry just did, but it's still a big deal to me how that supply and demand comes into play.
Yeah.
And you just illustrated it perfectly.
Thank you.
All right.
One of the things that I like most about what Jerry did is he gave you definable ways to set your initial stop loss.
Yeah.
And Jim Penna has always said it best, coming from the trading desk. Risk management starts when, Jim?
At order entry.
Right. So you got to know that before you step in. And I thought that was well done.
Thank you. And I know a lot of you folks out there struggle with that. You know, you tell us a lot, in some of our webinars, when do I get out? Or if I get in at this price, what price do I get out at? And systems like this, systems like what we teach in our Trade Like a Pro course, Steve and I, we clearly define entries and exits. There's no wondering what to do moving forward, okay? Because you always ask yourself, what do I do? We get asked that question, what do I do now? I'm in the trade now, what do I do? You should know what you are going to do no matter what's thrown at you. And again, a lot of the techniques that we teach you in swing trading course, Trade Like a Pro, we kind of lay all that out for you.
All right, so real quick, one, thank you guys for all of your picks. Thank you all for all of your information behind the picks. I think that adds more value to just this being four guys talking about stocks.
Yeah.
4 different perspectives, 10 different stocks. You guys got it, and that was awesome. By the way, Michael 3 Adams has won the course, the
right.
Congrats, Michael.
Ultimate Retirement course
Congratulations,
taught by
Michael.
Jim Penna.
That doesn't mean I don't want to see the rest of you there.
There
So
you
I hope
go.
to see you all there, but congrats, Mike.
And now I'm
Great
going.
course.
I am going to actually get everybody's attention for this purpose. The 4 guys that you see up here play an integral part in our educational department. This is what we do. Between Steve and Jerry talking about the Trade Like a Pro, if you haven't taken it, you need to. If you like the insight that they've given you today on their stock picks, just think how good the course is. They are very detailed oriented, and if you really want to learn to trade like a pro, it is well worth it for you to take the course. The swing trading, the bottom fishing courses. We have a lot of different courses taught by all 4 of us. Steve and I actually do the Jockey Club, which is a day trading room every morning from 9 a.m. to 11:30 a.m. A lot of people in this room are part of that.
Trading room.
What did I say?
Day trading.
Okay, trading room.
We do some of that, though.
But it's more or less, he's right, a trading room. And then I'm going to move over to my good friend Jim Penna. He does a lot. He does everything that goes along with retirement. There's a lot of retirement people in this room. The Ultimate Retirement Solutions course is a great course if you really want to prepare for your retirement. He's also part of.
Course.
I'm getting ready. I'm getting there.
Well,
I
get
got
there
this.
already. Come
All
on,
right.
you gotta go.
He also
Hurry
talks
up.
about the options paycheck course. Really, Jim? This Friday, he's doing a 1-day course for the Options Jumpstarter. If you're interested in options, you really want to learn more about options, if you haven't signed up for it, do it. All right? I am not in the same realm as they are as far as courses taught that are paid for. My big thing is the navigational series, where it takes me 16 weeks to walk you through each and every tab of the software. I am part of the Jockey Club. I am part of, on Thursdays, right here on YouTube, I do a new segment called Trending Thursdays. It's every Thursday at 2 p.m. right here on YouTube as well. So there's a lot of input. You want to learn more about this software, I can't see, you got all 4 of us here. We do the darn thing. And then we have other people that are in our department as well. Todd Schaefer was here for the last panel. Patrick France was here for the last panel. You're looking at us. This is what we do, and it's all about you guys. No, I don't Twitch anymore, Jay. No, it's YouTube. All right, it's all YouTube now, YouTube Live. And again, this was our first panel presentation on YouTube. Hopefully you guys liked it. I can see all of the comments that are coming up. Make sure you remind us on training. I just did. Mark, did you not hear that?
We must have a pretty good turnout.
What? For
Training Tuesday?
For Training Tuesdays.
I don't know for this.
I don't know how many people we had here.
I know.
But that I think that we talked a lot about it.
Jay's like 12 people.
Yeah, he types like 12 people. He really
I
does.
just want to comment. It's an email, so I'm not sure the name, but he says Jim has to learn that Glenn always runs over just a little bit, and believe me,
I know. Yeah.
Actually, we're sitting right at 3 o'clock,
Yeah.
folks. We're sitting right at 3 o'clock. So, like, share, subscribe. You got to do that. Jay said, I paid y'all to come. I'll give you your $20 later. But like,
Love you, buddy.
share, and subscribe. Biggest thing, subscribe. We are going to grow this space in social media from VectorVest perspective. You guys need to support it. If you like the content, there you go. That's why you subscribe. With that, I want to say thank you to Jerry D'Ambrosio, to Steve Chappell, to Jim Penna, and I am your host, Glenn E. Tompkins Jr., Esquire III, DDS. Yes, I had to make myself sound much more important than everybody else because that's what I do.
He's the lawyer dentist.
I'm the lawyer dentist. That's exactly what I am. So with that, folks, thank you for being here. Adios, arrivederci, ciao, au revoir, sayonara. See you all tomorrow. Later.